August 2nd, 2024. Today was Friday and it was the end of the week, and so magnets on the weekly chart are going to be important. I thought that the gap that we had on the weekly chart might try to get tested. Um, where was it? Oh, I meant, sorry, this high. I thought the high of 6.3 might try to get tested today. Obviously, we ended up testing well through it, but that wasn't until a little bit later in the day. We had, a pretty clear three bars, really strong on the weekly chart. And we have these three bars over here, and then we got some profit taking. So probably next week there will be some profit taking. However, I do think, this is the start of a trading range. So we're probably going to be in a trading range for a little while. And it's very possible the trading range started in April around 5,000, and then we got one more leg up. And this was just not the top of the trading range. This might be the bottom. That doesn't necessarily mean that this is the top. We ended up getting one more leg up, and now we have formed the top of the trading range. So I think probably sideways to down. Even if we get a reversal attempt up, it's going to be a minor reversal. So next week might be a little bit more sideways to up. But after that, there's probably going to be sellers above whatever bull bar ends up forming if we do get a bull bar next week. What are the odds we just get a vacuum test down to here? I don't know. Probably not all that high. I really doubt it. But maybe, I don't know, 30, 40%, maybe 40%. I don't think we're going to vacuum test straight down here. I think we're probably going to have to go sideways a little bit, maybe form some sort of lower high and a double top, and then maybe go lower. So starting today, we had a pretty big gap down. I thought, if you think about it, with yesterday we sold off 160 points, and we're gapping down, another 80-ish points. So I really was against the thought that today was going to be some sort of big bear trend day. I didn't think it seemed all that likely with how large the gap down was after yesterday being so oversold. And when you have a big bear trend day, the following day has a 75% chance of getting 2 hours of sideways to up trading starting by the end of the second hour. We got it today, but it wasn't very good. Today wasn't an overall really a great day. Pretty much started to sell off and then went sideways for the remainder of the day. So sell Climax on the open and then sideways would probably be what I would categorize today as. Big bear bar closing near its low on bar one. It's good for the bears. Whenever you get a big bear trend day, the next day, there is a 50% chance that you're going to get some sort of follow through selling on the open. This could be that follow through selling. If you were watching during the actual market hours when we got bar two, it was an inside bar for a lot of the bar. And the reason that that's important is that this gap down is a pretty large trend line break, and it's really climactic. It's a very climactic move. And yes, we got consecutive bear bars. If you think about the gap as a bear bar and one as a bear bar, we did get consecutive bear bars. But if bar two is an inside bar, it's a possible low of the day. And if it is an inside bar, you have to be thinking it's probably going to be some sort of trading range open. And if it's going to be a trading range open, or at least not a bear trend, a bull trend from the open or a trading range open, then we'll probably end up getting back to yesterday's low. So I thought yesterday's low was going to be a really important magnet. Even more so than yesterday's low, we gapped through this support area right here. You can see this is yesterday's low, but these support areas, the 54.32, I believe it is. What's the low of this? 54.33. So this is an open gap. And I thought if it's going to be a trading range open, we'll probably try to fill in that gap. And we actually never did today, which I thought was a bit surprising. So bar two, unable to close as an inside bar. Me, with bar two being unable to close as an inside bar, I'm not really that interested in buying it. If it was an inside bar, it'd be a smaller bar with smaller risk, and bar one would not be your signal bar. So bar two is now your entry bar, and bar one is your signal bar, and you don't really want to buy bar one betting that it's a trap and a possible low of the day. So it's really not all that good to be buying above bar two. Had bar two been a smaller inside bar somewhere in here, then it would be a much more acceptable buy. But the bar is too big, making the risk big, and that makes traders want to sit out because they're assuming it's a trading range open. Again, I thought yesterday's low and the lows I just mentioned on the daily chart were probably going to get tested today because this is most likely a trading range. And if it is a trading range, we should have legs up and legs down. And I figured that the gap would close in that area. I still do think that gap's going to close probably next week. So I do think we're going to get back up and close this gap next week. I just don't know exactly when. Bar three, a bear bar, but a big tail on the top and the bottom. It's really not very good. Bulls, what they're hoping for is that this too is the start of a bull trend. and bar 3 is a pullback in their bull trend, and so they're looking for some sort of high 1 to buy for a swing. If the traders, a lot of the bulls who bought above 2 are just hoping this is the low of the day, so they won't get out on bar 3. What do the bears want? Well, they had consecutive bear bars closing near their lows. Again, I'm considering the gap a bear bar, and then a bear bar 1 closing near its low, and then deep pullback on 2. They're hoping that bar 3 is the start of trend resumption down. Curious to see if we got a 50% correction. Yeah, in that area. So from the low of yesterday to the low of bar 1, we ended up getting around a 50% correction on bar 3. What are the odds that bar 3 is the high of the day? I don't know. I probably 25%. Probably really not all that high. You can bet that 2 is a bull trap, but it's not really all that good. It's probably better to wait and see what happens. A lot of the bulls who bought above bar 2 are willing to scale in, and they're not going to exit on bar 3. They want to see what they get. They're still convinced that we're in a trading range open, and even if we did go down a little bit, we're going to at least come back up to the bar 2 high, and they still think we're going to fill in the gap. Bar 4, it's disappointing for the bulls. They're still hoping that this is a pullback, but a lot of bulls were more interested in buying a correction on a limit order and looking to chase the rally back up. Again, they don't know what they did. Close of 3, you don't know what 4 is going to look like, so they're taking a chance we're going to get another bull bar. I think as disappointing as 3 is for the bulls, 4 is far more disappointing for the bulls because they were not able to get some sort of good-looking bull bar. The bears, they see follow through if they had sold below 3, so it's a possible high of the day. So it still is on the sell below 3 if you took it as a possible high of the day, but I don't think it's just all that great of a trade. So the bulls who bought above 2 are disappointed more with 4 than with 3. So you can see when 5 rallied back to their entry price, which is a tick or so. I assume it went a little more than a tick, but a tick above bar 2 is where their entry price would be. And you can see we basically got back to that area on bar 5 and the bulls sold. So maybe some of them saw 3 and exited their longs, but a lot of them knew that we might get sort of bad follow through and they were willing to scale in. But 4 pulled back too much for a lot of those traders. So instead, they scaled in maybe at 50% and just exited their first entry around break even and took the scalp on the scale in entry. So to me, 5 is sort of a give up bar for the bulls. They were hoping to get some sort of good looking bull bar, and instead you have a bear bar closing near its low. Can you sell below 5? Yeah, you can sell for a swing. I think this is more what you should sell, looking for it to be the high of the day rather than selling below 3. Is it all that great? It's probably not all that great yet because you have overlap with the bar 4 low and the bar, the tail on bar 5 and the tail on bar 4. So it's probably not as strong as it could be. However, I do think we're going to fall below the 1 low and the bar 2 low more likely than we go above here. So we're probably going down here. 6, follow through for the bears back to around the bar 1 low. So the question becomes, are the bears going to buy back shorts around the 1 low? So anyone who sold the close betting that this is going to be strong enough for a second leg down. Remember, if you think of this as a big bear bar, traders can sell after a gap down looking for a second leg down. It's a reasonable thing to do. So can you sell below bar 6 looking for follow through? Yeah, maybe, but I don't know. This just isn't all that ideal. One of my problems here is how big bar 2 is. If this is going to be a big bear trend day, why did they allow such a large bull bar so early in the day? It's the biggest bar of the day so far. It's kind of funny how big the bars are, 23 points, but obviously it's the only bull close of the day, so it's not all that strong, and it's not a reason to buy. But I'm interested to see if traders are willing to buy below and bet that we're going to get some sort of rally. Bar 7, you can see we got a pullback on the tail of bar 7. So we have increasing tail sizes from 6 and 7. And shrinking bodies, 6 is smaller than 5, and 7 is smaller than 6. So one of two things is going to happen here. Again, the bears, they see a micro channel. The bulls, they know that this is it's obviously not a bull trend from the open, but they're hoping it's still a trading range open and that the trading range starts to form somewhere down here and we get some sort of reversal up. And then we start to form a low of the day. We are oversold. It's true that we're oversold. So you kind of have to think about the fact that, again, we're down, we gap down 1.5% or somewhere in that range. And we're down like a little over 2% on the day at this point. And yesterday was such a big bear day that the odds are against us just going down 7-8% in 1 or 2 days. It's just probably not going to happen. 8, a climactic bar, a large bear bar closing near its low. We're probably going at least a little bit lower. But, do you want to sell the close 8? It's kind of tough, right? Your risk is so large, and this is a really climactic area and a really climactic bar. So it's true that it's going to get a second leg sideways to down. even if we start to rally, the first reversal up is going to be minor. But I think it's difficult to want to buy or to sell any of these closes, especially this is so climactic. Again, it would have been better for the bulls if we had gotten some sort of trading range forming around here. And I suppose if you're a bear, this is kind of what you wanted, but even that you got it, it's still not as good as it could be. So while it is sell to close, your risk is really large and the odds are just against another giant bear trend day. However, it's notable that we are now forming another open gap with the bar, the bar 6 low, the bar 1 low, the breakout point, basically the bar 7 low. So this should not have happened. Bar 8 was not a high probability event. So when you get this, it increases the chances that, well, when you start to go sideways in here, this is an open gap, right? So we had an open gap at this point, and we had an open gap with yesterday's low and the current high of the day, which would be the bar 3 high. So we have two open gaps. So it's possible that we end up having a bear trend day from the open. Like Al says, when one of the signs that you're going to have a big bear trend day is you have two open clear gaps, especially with at least one of them being an actual gap and not a body gap. We have two open actual gaps here, so it's good for the bears, but can they keep the gaps open? We're only 8 bars into the day, and we've already sold off a lot. So how much further are we really going to go? Bar 9, a bear bar closing near its low. No sign of a bottom, but again, this is really climactic. We've fallen extremely far, extremely fast. There will most likely be some profit taking soon. And that's probably what happens on bar 10. Probably buyers below bar 10. It's a low one short for the bears. They're hoping that we're just going to basically continue down below bar 1, or spike maybe some sort of small pullback, and then we get a channel phase. So that's what the bears want. Bulls think this is probably more of a trading range, and they're hoping the low one on bar 10 is going to lead to a trading range. Remember that low ones in general are going to lead to deeper corrections and then trend resumption, unless it's in the spike phase of a bear trend, in which case it's usually okay to sell. However, this is not one of those areas where it's okay to sell. We're way too oversold. So while we are in the spike phase of a bear trend, 10 is an exception to that rule, and it's not a very strong sell at all. So buyers below 10, bull bar, relatively expected during 11. If you're buying below 10, what are you doing it for? You're just trying to make a scalp. You're probably getting out during 12 or during 13. Maybe you're trying to make 10 points buying below 12. I assume those traders were able to. What's the low? So 53.45, so it had to get to 55. You can see we got there up in this area. So bull scalping out with 10 points who bought below 10, probably part of what is causing this. 11, you can see buyers below the breakout point, the bar 9 low, and buyers below 10. So it's a high one buy for the bulls, but no one wants to buy that. It's a bear bar, and we're obviously pretty deep in a bear trend. So really not very good. The bears probably sellers not too far above here. 12, a bull bar, but a big tail on the top. So again, what are you looking for at this point, right? Well, you're probably looking for a deeper pullback and then to sell for some sort of second leg down, or you're looking for a reversal up and trying to pick a credible low of the day. In this area, I was starting to think today, while we have a sell climax on the open, it's probably not going to be a big bear trend day. So I was starting to think that it was going to be a trading range day. And if it's going to be a trading range day, I was expecting the gap to close. So I was pretty surprised we never got back up into this area. I thought we were going to get back up into this general area, and we never did. 13, a bear bar closing near its low. It's a double top with 11. So 13, double top, 11, 10, 13, 11, lower high double top, 40% chance you get moved down to here. But I don't know if the math is all that great to sell, risking 13 points to make 23, and you have a 40% chance of success in general, selling a double top bear flag. So it's really not as good as it could be. 14 consecutive bear bars with one being big and closing near its low. We are always in short, and it is a bear bar closing near its low, but I don't know. It's kind of difficult to want to short down here. We're so far below the moving average. And bar 2 is still a little bit bothersome with how large that bar was. We also probably need to start to go sideways. What are the odds we're going to get another climactic sell-off to the downside, starting with bar 14? They're not very high. So, well, in theory, bear bar closing near its low, always in short, you could sell and just exit above a bull bar, but it's not really as good as it could be. 15, a bull bar, but a tail on the top and a tail on the bottom. Bulls hoping we're going to form some sort of wedge. Maybe we get one more leg down. Or, this is some sort of lower low double bottom, maybe with 11 or something, but it's not all that great to buy above 15. You can see bears ended up exiting above 15, and that's what causes 16. 16 is an interesting bar. To me, I see 16 and I see bar 2, and I'm thinking this is very clearly a trading range day. It's probably like it's very unlikely that we're going to get a huge bull bar 16 and a huge bull bar 2 and have a big bear trend day today. So I don't think that's going to happen. So that makes me think that we're going to close the gaps with up here. However, the problem with that is that this was a pretty tight channel down. So we might have to go a little bit more sideways first. So you can buy above 16, I think, but you probably have to have a bit of a wider stop because we might need to get one more new low with how tight the channel is. Granted, if you're buying above 16, your premise might be we've seen the low of the day, so it's a bit tricky to do that unless you're willing to adjust your premise. You can see that the one other problem is that we've been in a tight trading range, bar 10, 11, 12, 13. You can see this was selling low in the tight trading range. So breakout attempt at the tight trading range, 14, fails, reversal up 16, but it has not broken out above the tight trading range yet. So I think while it's okay to be long, that 14 and 15 is going to be strong enough for a second leg sideways stop. Question is, what is the pullback going to look like? And then 17, a bear bar closing near its low. So you could argue it's a higher high double top with here. You could argue it's a triple top, something like that. Triple tops really just have the same functions as a wedge, same forces in play. They just look a little bit different. So you could argue either one of those. You sell below 17. Well, it's probably okay too because we're still always in short. I think the buyers are always in short. The context might be, 17 is strong enough that the context is not always in long. But had 17 not quite closed as good, then the context probably would have been always in long, even if the bars make it always in short. But I think if 17 looked like, trying to think of a good bar, like I don't know, like this. If 17 looked like this, then it might still be, the context of the day might be always in long. We might be going higher. How are we going to work higher? Probably in some sort of bull channel. We're probably not going to rally straight up, but you have to be wondering if we're going to get back up into this area. So 17, a bear bar closing near its low. For the bears, like I said, triple top. And they're hoping this is a buy climax in a bull trap. The bulls, they don't, you don't like 17. You know that if you bought here, you're probably going to get a pullback, and you bought the high of the tight trading range and it hadn't broken out yet. But with a wide stop, it's probably going to be okay because, again, it would be really unusual for us to break far below this and not give the bulls who bought above 15 and 16 the chance to get out of their trade. Where are we going? Well, probably as opposed to a new low of the day, we might have to get back to the bar 14 close. 18, another bear bar, closing somewhat near its low. It gets basically to the low of bar 15. So bulls are hoping this is a deep pullback. Sometimes you get a pullback that's deep enough that it goes below the low, and then the bull trend starts, which is, seemed to be what happened today. Obviously, it was not a very strong bull trend, but I do think that that's what happened. You can see 19. So we have 3 straight bear bars, 17, 18, 19. So first reversal up might end up being minor after 3 straight bear bars, but 15 and 16, again, really strong, especially 16. So we might have to go a little more sideways here rather than down. I'm probably not selling the close of 19. We have shrinking bodies, 18, 19, and it's probably low in a trading range. You could additionally be a wedge, bar 9, bar 15, and bar 19. So 20, possible wedge, 9, 15, 19. 9, 15, 20. Bears are hoping that still bear trend and pullback and bear trend. But, I still think it's a wedge, so it's going to get a second leg sideways up, but I'm not willing to buy above 20. I want to see a better looking bull bar closing near its high. 21, a bull bar, but not closing near its high. The bears see a low 1 short, but if you're selling below 21, you're selling the low 1 at the bottom of what's probably a trading range. Yes, it's a wedge, and so, a lot of the bears who were selling 21, and we'll just say 22, right? So 22 is an inside bar, so it's still the low 1 short for the bears. But anyone who's selling this is hoping you get a breakout below a wedge, 9, 15, 20, and a really large measured move down, and it's probably not going to happen. Even a measured move down to the wedge seems pretty unlikely. So probably more buyers than sellers below 22, and this is going to turn into a trading range. 23, you can see we tried to break out below the wedge. So we broke below the bar 20 low and then got a reversal up on 23. 23, bull bar closing near its high. You can buy, if you're buying that above 23, there's a 60% chance we're going to get back to the close of bar 16, since bar 16 was a reasonable buy, and we're probably going to rally back to that area. There's an 80% chance we're going to get to the midpoint of bar 23 and bar 16. So it's credible by failed breakout below a wedge in a lower low double bottom with bar 21 or with bar 20. So you can buy above bar 23. Follow through on 24 is not ideal. It's notable that although 23 went outside up, it was unable to close above the bar 22 high. So I think a lot of traders wanted to see it close a bit stronger and break out above the bar 22 high, and it was not able to, which could have led to potentially a little bit less buying. So 24, a bit disappointing. But still, your premise of buying above 23 that we're probably getting here is still valid. And maybe if you're lucky, we get up here. 25, a bull bar, but not quite closing strong enough. Again, couldn't break out above the 24 high, which is bothersome. It's still a bull bar closing pretty strong, so it's probably still okay to buy above. Again, we're still probably going here, but I did not like that it did not close a little bit stronger. I wanted to see it close above the 24 high, so a bit of a problem here. Bull bar 26, but you can see when we rallied back up to the bar 16 high, what are you hoping? You're hoping that the bulls who bought here are scaling in lower, and they're thinking, yeah, I mean, I had to scale in lower than I thought I would, and it went against me a little more than I would have liked, but I'm still right. And so I still think my premise from here that we've now seen the low of the day is valid, and I still think we're going to close these gaps. That's where you're hoping to see. Instead, those bulls, they said, yeah, well, I made a profit on my scale in buys, or I just held long. And this was not what I wanted to see. So I'm going to exit the trade, and that's what they're doing, and that's causing bar 26 to have a tail on the top. 27, a bull bar closing near its high. So 3 consecutive bull bars. This is pretty strong. We're probably going higher. Could be the spike in a spike in channel. What are the targets? Again, I thought the 8 high, sell climax high was a target. This area would be a target. Past that, probably somewhere up in here where that other, obviously the high of the day, but past that, I would say somewhere up in here where that other low was that would fill in the gap on the daily chart. So 27, a big bull bar closing near its high. It's by the close, 25, 26, 27. But if you're buying the close, you have to realize you have pretty big risk. Now, are you buying the middle of the trading range? Let me see. So within the course of the day, you are buying kind of close to the middle of the trading range. You can see that's where we ended up stalling, was the middle. So a lot of traders look to buy low and take profits in the middle, but I still think reasonable to buy the close of 27, taking a chance we're going to start some sort of rally here. The minimum profit the bulls want after we get 27 is a breakout above the tight trading range. So they want a measured move up of the tight trading range here. You can see they got it. So 28, disappointing follow through. Bulls might not be as willing to buy up here because big bar, big risk, but still reasonable to do so. A lot of the bulls who bought above 27, they were hoping 28 was just going to rocket upwards. And when it didn't, they used the bar, they used the tail on 29 to exit their longs. So that could be what's contributing to 29. Bears are hoping this is a bull trap, and we're getting some sort of wedge with 13, 17, and 28, and that we're going to get a second leg down from this. So they're hoping this is all a pullback, and this is a buy climax, and it's going to end up being a trap. But 29 closing right on the moving average, and the context of the day is not as bullish as, or not as bearish as it was. We have quite a few, really strong looking bull closes, 16, 27, 2. So it's not really as good as it could be for the bears. 30 sellers above 29. So there ends up being sellers above 29 instead of below. Probably, again, going at least a little bit higher. It looks like we're starting the bull channel phase. We were in the spike phase up to bar 27, but then we have a pullback. So 30 seems like the start of the channel. Or sorry, 28 would be the start of the channel, but 30 seems like the market agreeing that we are in a bull channel. 31, a bull bar closing near its high. Yes, it's an inside bar and a high one. So the bulls see a high one and a bull trend. But, the bears know that this is probably a bull channel. So if you're buying above 31, you're buying high in a bull channel, because the channel high, the channel line so far would be bar 28 high and bar 30 high. So if you're buying up here, you're betting we're going to break out above what's probably becoming a bull channel. So, for me, if I'm buying here, I probably have to have the same stop as if you bought above 27. You still have to have a pretty wide stop. You can't really put your stop down here yet. That's a skunk stop. So we might have to pull back. But there's going to be more buyers below 30 than sellers. 32, a bear bar closing near its low. Bears are hoping it's some sort of higher high double top with bar 30, maybe, a micro wedge, 28, 30, 32. And they're hoping for a couple legs sideways to down. This is strong enough that I think the low of the day is probably in, but I don't know how much higher or lower we go. I thought, for most of the day, in here, it made more sense rather than selling to look for a reversal back up into this area, but still was reasonable to take the shorts later in the day, like 41 and 47. 33, follow through for the bears, but a big tail on the top. It's really not what you wanted to see. If you're selling below 32, you're selling against a really tight channel. So if you're doing so, you probably have to have a pretty wide stop, maybe somewhere up in here. But problem is, when the gap closes, then there will probably be sellers up in this area as well. 34, a big bull bar closing near its high. It triggers the high one buy, or sorry, the high two buy for the bulls above 33. So high 131, new breakout. I suppose you could say we went to a new high on 32. So you could argue 33 is the high one. Either way, expanding triangle. But 34 triggers the high one above 33. I think once you get 34, it's reasonable to pull your stop below 33 because we should not go below 34 if your premise that we're in a bull channel / bull trend of some kind is valid. So we shouldn't go back to this low if this is going to be a bull trend. And if you're a bull, you probably want to get a breakout here rather quickly. We're trying to get some sort of move up into this area. So you don't want another bear bar closing near its low because we've already had one. This is a reversal against you, but it's more of a pullback. This is definitely a reversal against you. So the next reversal against you is going to be a higher probability reversal. And so it's more likely that bulls are going to exit. Disappointing follow through on 35, but for the bears, some sort of wedge, 1, 2, 3, or maybe 1, 2, 3. But it's a bull bar. No one wants to sell below that bull bar because 34 and 35 are strong enough for a second leg up. So not really anything to do for the bears. We're still always in long. You can make an argument that 16 made the market always in long, and I'm not sure how much we went back to always in short. I think it became fuzzy in basically 15 to 23. I think once we got 26, that was the give up bar. Probably contextually, we were always in long. 25, but 26 probably made the market clearly always in long, and then 27 obviously always in long. So we are always in long. We're getting a bull bar closing near high on 34, so it's going to be a reasonable buy. 36, consecutive doji bars, 35, 36. Again, it's clear that we're obeying this channel line. So, if you're a bull, you're either hoping we get no more bear bars closing near the lows, and we just slowly channel up in this area, and then you take your profit, or you're looking for some sort of climactic breakout above the high, and then you take your profit. Because you have to know that since this is a bull channel, we might have to test back down into this area. Bull channels generally will test the higher lows and the lower highs, so it's not really as great as it could be to be long up in this area. Probably buyers below 36 though, 3 straight bull bars. So yes, wedge, but buyers below. And you can see we got buyers below during 37. 37, maybe the bears want it to be some sort of pullback, but really just bull channel is the important thing to know here. An inside bar 38, so we went to a new high and pulled back. So 38 is going to be the high one. You have to ask yourself, do I want to buy above an inside doji bar? A doji bear bar, in a relatively weak bull channel. It's tight, but they're getting reversals against you, so it's not as strong as it could be. And this is another sorry. This is another situation where the bulls aren't quite doing enough. For the bulls, you wanted to see one of these bars be a strong bull bar breaking above the high, and then see how the breakout looks. And they haven't quite been doing enough. We haven't gotten a bear bar near its low yet, so the bulls aren't going to exit, but they're probably getting impatient. And then we get a bull bar 39, but a big tail on the top. So disappointing rallying up into this area. And I think this was a wedge. So 27 and then 32 and then 36. So wedge 1, 2, 3. And 39 was the breakout attempt above the wedge to see if we were going to go higher, and it failed. So disappointing 39. Does that mean you sell below 39? No, but you probably don't buy below 39. And then you get 40. So always in bulls probably are going to exit below 40 since wedge and failed breakout above wedge 39, 40 bear bar closing near its low. Bulls can get out. Bears can sell. I would probably personally wait for one more follow through bar, but it's reasonable to sell. And then you get consecutive bear bars closing near their lows, 41. We're always in short. So 40, 41, always in short. It is, however, a trading range day, and you're probably selling near the middle. If you sell the close, you're selling the exact middle on 41. So probably not quite as good as it could be, but still probably not unreasonable to be short. Disappointing follow through on 42, but relatively expected. If you're selling here, you're selling for a couple legs sideways to down. You don't really know what they're going to look like, but small pullbacks like this probably should not scare you out of trades. Bulls were hoping that 42 was going to close on its high and it was going to be a higher low from here. Maybe, trend line break here, higher low major trend reversal. But after these consecutive bear bars, it might not be all that likely. And you have a disappointing bar on 42. Bears just see a pullback since we're always in short, and they just see a pullback. We did pretty much immediately go test the bottom of the channel in this area. The buy climax low would probably be the next support point or the breakout point. So the bar 21 high, somewhere in that area. 43 buyers below 42 during 43. And you can see we're probably not going that much lower without a pullback. An inside bar 44. It's a high one, but it's probably not really worth buying. What do I think is going to happen? Well, first off, we're in a trading range on a Friday. So you should be in buy low, sell high mode. You should probably be pretty wary of doing almost anything else. So, was it okay to sell below 40, 41? Yeah. And if you're doing that, you're not getting out above 44. You're holding for, some sort of second leg down from the whole move. But it's not okay to be buying that high one after those consecutive bear bars. We're still always in short, and we haven't become always in long yet. But probably buyers below the low one short for the bears. So inside bar low one for the bears. Probably buyers below a low one. That's a bull bar on 44. So outside up 45 doesn't close on its high. Even if it did, lower high major trend reversal, but show me follow through. I think if we're going to go up, we would have already done it. So not all that great. 45. Still consecutive bear bars here. So probably holding always in short. We're not able to trigger on 45. Some bears might exit above 45 if we triggered it and look to sell again lower. So or later, maybe lower, maybe higher. But this pullback, this was probably going to get 40, 41 was probably going to get some sort of lower high. So I'm not sure how much higher we would have gone had we triggered above 45. 46, an inside bar. It's a low two short. So the low one here, pullback, low two. But there's a tail, so it's really not as good as it could be. You're kind of selling in a tight trading range, 42 through 46. I think 47, we're back to clearly always in short. So we went always in short. We were still always in short in here. We never flipped back to always in long. But then we got another bear bar closing near its low. So always in short, sell to close. You can sell below 47. If you're selling, what are you looking for? Well, the buy climax low is going to be support. And if we get to the low of the day, there's probably going to be buyers there. The context is not overly bearish. So I don't know, you could sell and maybe take piece off at 10 points. It seems like a lot of traders did that, part or all, since it's trading range day. One argument for taking all off at 10 points would be you got filled during bar 55, basically a point or so below bar 54. And if you're a bear, do you want to be selling below 54? No, there's probably more buyers below 54 than sellers. So it's not as good. Did we trade above this high? Okay, so it's not as good to be selling below 54. Additionally, we traded above 52 or 51 during 52 and reversed up again on 54, traded above 53. So that's two reversals up and a bull bar. So this move is probably almost over. So there's probably buyers below here. But anyways, 48, there's a pullback probably to around 50% since it's big bar, big risk. I guess if you use bodies, it might be. So we never even got to the 50% pullback. So bears were too eager to sell to let it get to a full 50% pullback. And then we have a bear bar closing near its low, 48. However, this is probably the start of a channel. 46, 47 would be the spike. And then 48 is the start of the channel for the bears. Since you have a pullback on 48, the tail is a pullback, which means that it is the start of the channel because you have spike, pullback, channel, trading range. That's the market cycle. So spike, pullback, maybe channel. 49, another bear bar, but a big tail on the bottom. So, we kind of have consecutive doji bars, 48, 49. It's not really all that great for anybody. It's still always in short. We're probably going at least a little bit lower, but I'm not sure how much lower. 50, an inside bar, a low one short for the bears. Again, not really all that great. We're still always in short. It's still sell to close. We're probably going at least a little bit lower, but you're selling the low one relatively low in the trading range. So it's not a trade of the day type trade. Buyers not too far below 50 during 51. You remember that low ones normally lead to deeper pullbacks and then trend resumption. So we did end up getting a pullback above 51 and then tried to resume the trend down on 52. So 51, it's a high one for the bulls. They want maybe some sort of wedge, 1, 2, 3. Probably not going to be all that effective. Sellers not too far above 51 for at least a scalp. And that's exactly what happened. And that's what caused 52. So sellers above for a scalp and then a bear bar closing near its low, 52. Do you sell below 52? No, probably not. You're selling so low in this range and you just got a pullback. So If you're selling 52, you're probably just putting a stop above 52. And well, I guess there'd be a couple ways to manage it. You could use a wide stop and look to scale in, but tricky. Or you could just put a stop above and take a chance we collapse on 53. If you do that and you get the bar you get on 53, you probably have to get out. And that's probably part of what's causing 54. The aggressive traders who sold below 52, they're saying, okay, we'll put a stop here. And the next bar needs to look like this. I need this bar 53 to look like 41 and be really climactic and start a big breakout to the downside. And instead, you get kind of a disappointing bar on 53. Yes, it's still a bear bar, but the tail is smaller. So the body is smaller. So 53, the body shrank and the tail got larger. What does that tell you? That shows a slowing of momentum. You wanted to see increased momentum after 52. And instead, the momentum slowed on 53. So that's why some traders buying back shorts during 54. 54, it's a bad short for the bears. We went to a new low here. So you could argue it's a low one short for the bears, probably buyers below the bull bar. We're, in a support area too. We're in the buy zone. So probably better to just be flat at this point. You can see buyers below 54 during 55. Still probably always in short, but it's not very good. And they use the rally on 56 to scalp out of their trades. They buy below 54 during 55. They use the rally 56. They sell out. 57, an inside bar, another low one short for the bears, but really not very good. It's a doji bar, and we're in the buy zone. This is a tight trading range. Another doji bar, 58. So again, really not as good as it could be. I'm just waiting. We're in breakup mode. We have 3 straight doji bars. So we'll see what we get. And then you get a bull surprise, 59. Bull surprise, it's closing far or decently above the tight trading range. So the tight trading range, probably 52 high, and we've been in it. And then 59 closes above the whole thing. It's a bull bar closing near its high. So yeah, you can buy the close of 59. You're closing above the moving average. Take the trade. What's your target? Well, there's a couple. The bar 45 close, we're probably getting back to that since consecutive bull bars. We'll probably get back to this area. The bar 39 low, we'll probably get back into that area. If you're lucky, we'll get all the way up here. So you can take it and see what you get. And you get good follow through on 60 consecutive bull bars. We're always in long. We were probably always in long with bar 59, but I think by 60, we're definitely always in long. But then disappointment 61. Doji bar means by the close, probably coming into an end soon, but still always in long. You don't have to get out. You can just wait for a reasonable reversal against you to exit. 62, a bear bar. Disappointing, but there's still, if bulls can get a good looking bull bar on 63, then it should be okay. The real question is when we get back to the close of bar 60, are we going to rally or are we going to sell off? Because the bulls who got the close of 60, how disappointed are they in 61 and 62? Are they really disappointed? And when we start to sell off, are we going to, or when we rally back to that area, are we going to sell off or are we going to continue to rally higher and get a strong close above bar 60? And we rallied to that general area and then got a bear bar, 63, so disappointing. 63, a low one short for the bears. They're hoping 59 and 60 was a bull trap, but 61 is your signal bar, and that's not a very good signal bar. Additionally, this is a small higher high from bar 46, so not quite as good as it could be. Maybe a wedge 42, 45, 61, but not really great shape at all, and difference in sizes of the legs. So really not a very good argument. So 63, a bear bar, a low one short for the bears, but after 59 and 60, we're probably going at least a little bit higher. 64, I think, is the important bar. The bulls who were long or holding long below 63 were betting that the bears were going to get trapped below 63, and this was not a bear trend. So they were hoping outside up bar closing near its high, we're going to race up and retest those magnets. Instead, the bulls, they ended up selling out of their longs around the 60 high. So that's disappointing. An inside bar 65, an IOI pattern. So IOI 63, 64, 65. Do you buy above 65? It's a high one. You probably can, but it's disappointing that the bulls got out, and you're probably going to lose money if you do it. A tight stop is probably okay. You should probably just be safe, use a bit of a wider stop, but you're getting out below 66. It could be just a second leg trap, 66. It's possible. But for me, I think the bulls have had enough chances, and if we're going to go up, there's going to be a better area to buy at this point. So I don't know. I think we might have gotten our second leg sideways to up from bar 60 on bar 64. And we got there again on 66 when we rallied to that same area and the bulls sold again. So the bulls have now sold out of their longs a couple of times. So I would just get up below 66. Yeah, and whenever the bulls, second reversal against you means the bulls here had a chance to exit their longs. They got out. They had a second chance. They got out. So most of the bulls are not in this trade anymore. So your premise isn't as valid as it was. And a lot of traders will exit below 66. 66 for the bears, a big bear bar closing near its low. They know it's a tight trading range, but they're hoping this whole thing was a bull trap and we're going to end up starting to sell off. However, we are in the middle of a trading range, so it's not as good as it could be. and reasonably big risk. If you were looking to sell here, you probably needed a really good follow through bar. Instead, bulls bought the close of 66, taking a chance they can make at least a scalp. We got a reasonably good rally on 67 before bulls sold out of their longs. So the bulls who bought above 65 were ready to get out below 66, but then 67 started rallying, and they said, "Oh, I can just get out of this trade for free. And if 67 closes on its high, I can just buy again." So that's what a lot of them did, and that's what caused that. 68 trades below 67. Probably buyers not too far below 67. This is a tight trading range, right? Ever since bar 60, we're in a tight trading range. You can see one of the problems with 65 is you have three trading range bars: 60, or 61, 63, and 64. So you have three dojis in the past 4 or 5 bars. So this is a tight trading range. And if you're selling 66, you're selling the bottom. We haven't broken out of the low yet. So it doesn't really make sense to sell below 67. Reversal up 68. Still probably always in long, maybe some sort of wedge, 62, 64, and 68. But a doji bar buying the middle upper third of a trading range. So really not very good. 69, yes, follow through, but tail on the top and tail on the bottom, not really that great. Disappointment 70, and bulls, you can see, tried to get a breakout above the high on 72. We broke out above the bar fit 61 high and then failed again. So reversal down 73. Wedge, do you sell 73? You probably can for a scalp. You get 74, but 74 now, big bar, big risk at the bottom of a trading range, not worth selling. Reversal up 75. So nothing really worth doing in here. And maybe a wedge at the end of the day, 1, 2, 3, but too late to do anything. So interesting day, kind of a big triangle, spike, and then trading range. Trading range is breakout mode. Remember, triangles are inside bars on higher time frames. So to me, this is all breakout mode, and we'll get some sort of breakout on Monday. If we get no gap, just wait, and if we first break out above here, see if it fails in reversal, then you can sell. And if we get a gap down here, maybe look for a failed reversal below the prior day's low and a reversal up. I think we're in trading range here. So spike, overall maybe a little bit, better for the bears since this was this dominant feature of the day, but I'm not sure how much better it was. For stop orders, I think that you could have sold below 5 since it's the give up bar. You could have taken these sells, but I don't know. They're not all that great. You can probably sell these closes, but really climactic. I made a mistake today. I sold below 14 because we had the 2 open gaps, and I was too focused on what happened yesterday. The fact that, and I never, if this doesn't happen, I don't take that, but I just got a little too focused. But I took a really, really, really tiny position size, and so my loss was very small on it. But that would be my critique. One of my critiques of myself today is I shouldn't do that. I think you can buy above 16, but you probably have to have a bit of a wider stop. You're betting it's a trading range. We might get one more leg down though, because of how strong the move. Sorry if that was a little loud. The move from bar 3 to bar 9 was. So yeah, it's probably reasonable to buy above 16, but we didn't break out above the bar 10 high or the bar 13 high, which is possibly the top of that trading range. So it's possible we get one more leg down. Maybe you could sell below 17 for a bull trap, but I don't know. I think it's a trading range. So the bulls who use wide stops and scale in are probably going to be okay. Okay from bar 16. 23, you're buying lower in the range. So that's a reasonable thing to do. Failed breakout below a wedge. Maybe 25. I wish it had closed stronger. 27 makes sense. Maybe 31 if you got a wide stop, but you're buying high in the bull channel. 34 by the close, or not really by the close, but a reasonable bull bar closing near its high. It's always in bulls exit below 40. You could sell 40 or 41 for a second leg down, maybe 47, 48, but it's not that good. This is a relatively weak channel. I would not sell 52. If you're going to take that, you're out on the close of 53. Bull surprise 59, so good for the bulls, probably going at least a little bit higher, and by the close 60. But the problem is 60 doesn't break out of anything, so 59 breaks out of that tight trading range, and 60 doesn't break out of anything. If anything, it's heading into more of a resistance area with the 45 close and 39 low, but still probably not unreasonable to buy. And then after that, you probably got to get out, I don't know, maybe below 63 or below 66 or something. And there's no real reason to buy again, so I would just be done. So, like I said, breakout mode. We'll see what happens Monday. To me, this is not all that strong. I don't think this gap is staying open. So I think that the Bears have done obviously a very good job, but I think we're probably going to fill in this gap relatively soon. But very clearly, we're in a trading range. We're, 6% off the high. So we're probably going lower overall, but I would expect us to fill this gap in and go probably more sideways than anything next week. Like I mentioned on the weekly chart, probably going to be a bit more sideways here. And one of the reasons I think we're going to be more sideways is the monthly chart. The fact that this was a bull bar is really, there was a couple of nested wedges, one, two, three. Well, on the monthly chart, and then the weekly chart, there was a big wedge. They're showing on a lot of time frames, 1, 2, 3, probably even a bigger one. But you get, I don't know, let's see. What does 10 years look like? Yeah, not as clear, but multiple nested wedges, daily, weekly, monthly charts. 1, 2, 3. So I think we're probably going at least a little bit lower, but the monthly chart gives me issues because I think that had it closed on its low, I would have been more bearish. But the reality is, even though it's not great to buy below here, the bulls who buy below here and are willing to scale in are probably going to make money. So I do think it's probably going to be more sideways rather than just down this month. But really large week, almost 300 point or 269 point week. So that's pretty unusual. But yeah, all right, that's the day.